Today we're talking about asset depletion and use for income, and we're honored to have Alex Garfield from Home Express, and they're one of our lenders, and Alex happens to be very informative of some of their programs, and we were speaking.
Thank you.
We were speaking yesterday about asset depletion, and especially for retirees and people that don't want to dip into their savings, or feel overextended. Why don't you give us a little preview of what you do and how your program works?
Thank you so much, Don. So with our asset depletion program at Home Express, it's a pretty easy formula. We take your assets and divide it by 60, which is lower than most lenders. A lot will do 80, 120, even 360, some of the larger banks. But we just divide them by 60, so that's more qualifying income for you. However, when it comes to like retirement accounts, we can still use those accounts, but we do a 30% haircut. So the math is still pretty easy. Like for example, just for easy math, if you had $1 million in a retirement account, we would take the 30% haircut, which would bring us to $700,000, right, and then divide that by 60.
And that comes to what, about 11, 12,000
a month?
A month, off the top of my head. That's qualifying income.
Absolutely.
And they don't have to pull that money out.
Correct.
It's used, but also, if they had $1 million, and we're talking about this haircut, if they're using that account, also has to be reduced based on their down payment and closing costs also.
Absolutely. Thank you for bringing that up.
Yeah.
We have to exclude money for down payment and closing costs. That's true.
Right. But that's a great formulation, and surprising that so many mortgage professionals don't use this asset depletion and talk to their customers about asset depletion instead of just looking at them and saying no. I mean,
for sure, especially at the larger banks. I was telling you earlier how I worked for a large bank, and we would divide the assets by 360. So it's, you'd have to have basically 6 times more assets to qualify for the same income. So this program's better in that respect. And
it gets more people in homes. I mean, seriously, that's our business. Get them in homes, and we, especially in Florida, where we have such a high retiree population, on fixed incomes, maybe Social Security. Let's add a little bit to that asset depletion, is they can also use their other income, so if they had income from Social Security or a pension, that also counts too.
Exactly.
That's added to it.
Thank you, Don. Yeah, we count both of them. Your qualifying income, whether that be Social Security or pension, plus the asset depletion program, and we add them together.
And it's great to have our lenders here. As a broker, we always ask questions of our account executives, and Alex to explain certain guidelines to us and what products they have to offer. But as a broker, we're here to help people, and these are just some of the tools that we have. Asset depletion. Alex, I appreciate you coming in, and I appreciate you telling our audience, about this fantastic program. Thank you, sir.
My pleasure, Don. Thank you for having me.
Thank you.